Hello, today's Saturday, November 30th, 2024, and I am Jason Shapiro with crowdedmarketreport.com. Today I wanted to discuss how the stock market is overvalued. And certainly by any traditional measures of valuation in the stock market, we can make the argument that the stock market is overvalued here. PEs are pretty high. Price to sales in a lot of cases are crazy. You have things like the Buffett indicator, which is the stock market compared to GDP is at like record highs, which is why we see, Warren Buffett sitting in a lot of cash here to where he is traditionally. And by those historical measures, we can argue pretty easily that the stock market is overvalued. But as traders, the question becomes, why is it overvalued? Okay. And I think there's two possible answers. One is that people have just gone crazy, right? They're FOMOing here. The stock market's up 50% in 2 years. People missed out the majority of that because at the beginning of that, everybody was seeing nothing but recession and the market was going to come down and all that. And they were in a lot of cash, and slowly that cash has been going into the market, pushing it up. And recently, in particular since the election, arguably, a lot of cash has started to pile into the stock market, and they're not paying attention to valuations. They're just FOMOing in. Valuation be damned. And if that's the case, then you're not going to want to be bullish, right? I'm not saying you're not going to want to be bullish today, because we did just close on a new all-time high, but it's something you're going to want to watch for. So that's case one. Case two is this. The market prices as a discounting mechanism to the future, not the past. So if you take that side of it, you would say the market is discounting in something in the future that is going to be great, right? And what could that be? Well, we know, first of all, we have a new administration coming in, and that new administration is very pro-economic growth, right? So they want to grow the economy by doing things like cutting taxes and reducing regulation. And we know that those things are, in fact, growth friendly. So they can pull that off. They want to pull that off without creating any inflation. Is that possible? Maybe. The big driver behind inflation, I believe, is energy prices for the most part, which is oil for the most part. And this administration wants to drill, baby, drill, and keep the price of oil low. Doesn't mean they have to push the price of oil down to $25 a barrel, because we know if they push it down too far, no one's going to want to produce oil, and commodities adjust that way, supply demand, right? But they don't have to do that. They can just kind of keep oil prices here. If you can get economic growth and keep oil prices here, then inflation is not going to run away, I wouldn't think. So can that happen? Yes. The third leg of this, I think, is the big problem, which is the deficit. We know that at some point, the deficit becomes unsustainable. We don't know where that point is yet. We haven't hit that point yet. We may never hit that point, but arguably the laws of economics would tell us that it becomes unsustainable. Can they do this and not increase the deficit? That one seems to be very, very difficult, okay? Because we know that the last few years, well, really since the financial crisis in 08, 09, the majority of what we have seen as economic growth has been driven by government spending, right? Government spending has gone through the roof. We had bailouts, we had all that stuff, and it went through the roof, and that money has helped create the economic growth that we have seen. How are they going to do that while not continuing to increase that government spending is a tough call. Now, I know they want to reduce waste in the government, and that's one way that you can help to do that. But it seems to me a tough call that the deficit is going to go down. And if the deficit doesn't go down and it keeps going up and interest costs keep going up, like I say, at some point that could become unsustainable, and that would be a big problem. To me, that's the biggest risk to all of it. But the fortunate thing is we'll kind of know if that's happening because the bond market will reject it, right? To this point, I don't think the bond market has done that. Yes, bonds came down since they cut, and interest rates went up since they cut rates 50 basis points a few months ago. But there's nothing that I would see as abnormal there, right? Rates sort of reflect what they normally reflect in terms of economic growth. We're growing a little bit less than 3%. Rates are a little bit less than 5%. That's normal, right? If rates start running away, then that's the bond market saying there's too much debt out there. We're rejecting it. We're not giving you the money for that debt unless you pay a much higher interest rate. And that will be the sign that is what's going on there. And listen, since the election, bonds have gone up and rates have gone down. Now could just be a temporary thing. The market was oversold, yada, yada. We don't know, but that's the place, in my view, to watch out for that. One issue that I think is, of all the issues, the hardest one for them to get in control. And then, of course, we have the idea of AI. And I am no technology expert. I couldn't sit here and tell you what AI is going to look like. What I do know is we have a lot of smart, successful people that have unbelievable amounts of capital at their disposal, that they're investing very, very heavily in this AI. Now, could it be that they're just crazy, or they're just trying to find something to put their money in with the hope that will let them continue being the masters of the universe? And they could be wrong. Yes, it could be. I don't know, right? But, it's funny with these people in that they're not really just betting on something that could happen in the future. Because of the amount of money that they are putting into it, and because of how much of the technology they control, they're actually helping determine what the future is going to look like, right? So, does that work? Well, again, I don't know, but let's say it does. I saw an interview this week with one of the big titans who was talking about how in 10 years, things are going to be so cheap because of AI that people are not going to have to work. And they're going to be able to live a good life. I guess robots are going to do everything or whatever. I don't know how that looks, but that's what he's saying. Now, again, maybe he's just talking his book. But what if, forget about that, what if it's true that AI just does this incredible job of creating amazing amounts of productivity? Well, then the market probably isn't so overvalued in that situation, right? To me, the market goes up based on three things. Population growth, because you get more consumers for your goods. Some inflation, because you get a higher price for your goods. So your revenue goes up, even if you sell the same amount. And productivity growth. And we have seen great gains in productivity growth many times over the last century and a half or so. Electricity, transportation, internet, and now this AI is the next possibility. And it's supposed to be the biggest one ever. Now, clearly, hype and bubbles are grown out of that idea, right? This is the next great thing. And we saw that in the 20s. It turned into a bubble because we had all this stuff going on with railroads and all that were going to make everything so great, and did, in fact, but prices just got away from themselves. We obviously saw that in the late 90s, where it turned into a bubble because of the internet, because the internet was going to change the world. The internet did change the world, but prices got ahead of themselves. And now we're seeing that with AI. Have prices got ahead of themselves yet? Again, we can argue on a valuation basis that some maybe have. But we can also argue that on the things that might actually benefit from the AI, forget about the people that are making the picks and shovels, but might actually benefit, really have not gotten out of control, if that's the case. So, what's my answer? Is the market overvalued? And the question is, without knowing what the future looks like, there's no way to know. But we have the tape on our side, as always. If you believe in any of this stuff, if you believe that, yes, the future is going to be this incredible thing that AI and the Trump administration are going to push along and be successful in doing, then you're going to want to be long. And the tape should tell you should want to be long. Well, to this point, we're on all-time high, so the tape is telling you that, right? If you want to believe the other side, that whatever, Trump can never pull this off, the administration can never pull this off, and AI is just a bunch of hype and all that, then you're going to want to be short. But again, you're going to want the tape to tell you when to be short first. And closing at all-time highs is not the tape telling you that, okay? You have to look for things like that are telling you, hey, the Trump administration is pulling this off, yet the market doesn't go up. You have to look for things like, hey, AI is really doing what it's supposed to be doing, and the market doesn't go up on that. Then we know that the prices have gotten ahead of themselves and the positioning has gotten ahead of itself, and it can't follow through anymore. But we certainly, which side it is at this point, the tape is clearly saying one thing because it's closing on all-time highs. So you're not going to fight that. Fight it when the tape tells you to fight it, okay? My number one advice. I could probably just said this whole video based on that and forgotten the rest of the stuff. But anyway, that's my thought. I'm trying to put in your mind, in particular, if you're bearish, I'm not here to disagree. I could see all those things being total crap. But don't fight the tape, right? Have in your back of your mind, I could be wrong about this stuff. This administration maybe could pull off this growth miracle. This AI thing really could be real. And that will help you understand why, despite the fact that you might be bearish, why you're losing money being bearish. Because maybe these things are going to be real in the future, and maybe that's what the market is actually discounting in. Just something to keep in your mind to help you from losing too much money betting against it. And B, let the tape confirm it anyway, okay? It doesn't guarantee that that's going to work, but it helps, right? It definitely puts the risk reward more on your side when the market starts to agree with what you're saying rather than not agree with what you're saying. When the market is not agreeing with what you're saying, you are fighting the tape, and over time, that's terrible for your P&L. Okay? So anyway, those are my thoughts for today. Always happy to hear questions and comments. Please check us out, crowdedmarketreport.com, free Substack, check out our YouTube videos, all that stuff. Okay? And we will talk again soon. Thank you very much.